What is up, guys? Welcome to Tokenomics. Ian here. Another week, another Coinlist ICO, and this time it's July 8th in Qredo. And at the rate at which they're pumping these out at the moment, and the current market conditions, as well as the performance of some recent Coinlist projects, it's more important than ever to do the due diligence, dig down past the market and hype. Don't just read off a Coinlist page. Go into the AMAs, the telegrams, the team members, talk to the mods, ask them the tough questions. And that's exactly what we did here. We put in a lot of research for this video, and I'm confident you won't find a more comprehensive review of Qredo on YouTube. So with that, I'm going to pass you on to Zach, who's going to take you through the concept and how it all works before I move on to the tokenomics.
At the moment in the digital asset economy, traders face a series of risky technical challenges. Assets must be shuffled between hot wallets, aka something like MetaMask, which sacrifice security for liquidity, and cold wallets, aka Ledger or Trezor, which forfeit fast settlement times for security. So what does Qredo look like in practice? Well, it's kind of like a mix of MetaMask, Binance and Uniswap, a centralized exchange, a decentralized exchange, and a trusted wallet rolled into one. Qredo is made up of 6 key components. The first one, decentralized custody. Well, maybe it's easy to explain the opposite first. Centralized custody would be like Binance, where they are in control of your assets. Decentralized custody is if you hold your assets on Qredo, there's a system and a protocol to ensure that no entity has control over your assets. Self-custodial wallets for centralized exchanges and DeFi. Think of these like your MetaMask. You hold your assets in them and you can exchange them for other assets. DeFi Hub acts as an all-in-one hub, like a one-stop shop where you can stake, swap, borrow, lend, and all the other bits that make up the DEX. Think about it like PancakeSwap or Uniswap. Peer-to-peer over-the-counter trading, well, this cuts out the market maker and significantly lowers fees because you're dealing one-to-one, like me to you, trading Ethereum for Bitcoin or things like that. There's this thing called the Travel Rule Compliance, and this is there to enforce the Bank Secrecy Act and requires financial institutions to collect and retain information on you. Yes, you. They can pass on to the government if you've transacted in $3,000 or more, which is $7,000 less than you can bring across borders legally. There's a very interesting article on Coindesk in the description. And guys, also, don't forget to give us a like and subscribe. We're really trying to get to 2K as quickly as possible. There's also this other thing called Trader Chat, which, like as it says in the thing, connects traders so they can facilitate peer-to-peer transfer, and just, I presume, adds a social aspect to the whole Qredo ecosystem. There are 3 layers to the Qredo ecosystem. The bottom layer, the grey one in this graph, is the one that deals with all the non-native assets like Bitcoin, ERC20 tokens, and DeFi protocols. Then in layer 2, we have the Qredo blockchain, which, for want of a better term, wraps the layer 1 assets and exchanges them one-to-one for a Qredo-based asset. This one-to-one is backed and verifiable by the blockchain, unlike other entities in the space. I'm looking at you here, Tether. The top layer is where all the fun happens, the trading, the creation of markets, the apps, etc. As I alluded to earlier in decentralized custody, Qredo is not a centralized custodian like Binance or Coinbase, where those entities keep your private keys. And we all know that phrase in crypto, not your keys, not your coins. What Qredo does differently is it has this thing called a multi-party computation, and this is its real unique selling point. Multi-party computation is a completely new way to sign a transaction or generate a public key that will verify that signature. What happens is decentralized computers do a network protocol, throw some big prime numbers at each other, and if they're all given the same thing to sign, they all output the same signatures, thus eliminating the need for a private key. So no more Alice and Bob. Qredo's multi-party computation protocol generates multiple independent secrets, which are then distributed between multi-party computation nodes in a fast finality blockchain. Each MPC node is housed in a security-hardened Tier 4 data center in places like Hong Kong, London, and Chicago. So some of the benefits include instant settlement. Once signed, the ownership of the asset is transferred instantly between the counterparties on the Qredo network. Unlike on blockchains like Bitcoin, where it can take 10 minutes to 2 hours. There's unprecedented security. Private keys stored online are prime target for hackers, and instead of hacking a single machine and walking away with a private key, a hacker would need to compromise all the machines in the MPC network, and each MPC node is housed in the aforementioned highly secure Tier 4 data center. There's also clear transaction records. Each time the MPC node taps into the Qredo blockchain to verify asset ownership, the consensus is recorded with a digital signature. This provides a 100% transparent and immutable record that can be made instantly accessible to regulators.
Yeah, thanks, Zach, for giving us a really clear picture of exactly what Qredo is and how they plan to implement it. In terms of the tokenomics, there is a couple of really key factors here. So if you guys have made it this far, well done, because it can be kind of heavy content. But yeah, pay attention for this, because there is a couple of really key things that aren't clear when you first look at them. So this is the initial token distribution, okay? We have normally fairly standard stuff. I would say that the public sale is a smaller percentage than we would normally see. Also, it's important to note, and I will go into the fundraising history in a little bit, that the seed investors were not just exchanging their money for tokens, they actually exchanged them for shares in the parent company, Qredo Finance Limited. So that's also something to note. The Treasury Reserve at 3.784% is kind of what you would initially think of as foundation endowment tokens. These are controlled in the British Virgin Islands where the company is registered and are used to further the goals of the network. So can be anything like, things like getting people to come on board the network in terms of developers and stuff like that. The ecosystem and initial validators is a very interesting one, because although this kind of does claim to be a decentralized network, it in fact is not really at the start. The initial sort of nodes and validators are actually run by the Qredo team. Over time, they've said that, decentralization is really the way that you can achieve the highest levels of security. And that is what they plan to do. Like, it comes down to a matter of trust, right? I mean, they're going to be making a lot of money by validating these transactions and stuff like that. So yeah, we just have to put our trust in the hands of them that they will actually farm this out and decentralize the whole operation when the time comes. So this brings us on to the first really key point. That chart of the token distribution actually only details half of the Qredo tokens. 1 billion on that chart, but actually there will be 2 billion. The second billion will be given out as rewards to participants in the network. So you've got your trader user. He's going to trade, he's going to pay fees. He will then receive a certain amount of rebate on those fees in accordance with the amount he trades. Really interestingly, you've got your custody user, who based on the total value of assets under management will receive a rebate each month as well. And he would want to, because 0.75%, so 0.75%, every month of his Bitcoin, his Ethereum, his Solana, whatever the hell he's holding on the site, is going to be taken by Qredo. Now, I don't know about you, but I'd sooner just leave it in my MetaMask and not have my Ethereum constantly be diluted and replaced by this native token every month, but that's the way it is. In terms of the market makers, they obviously facilitate the trading, so based on the amount of trading they facilitate, they'll get the rewards on Qredo tokens too. And for validators, and remember, at the start, this is not decentralized. A lot of these validators running the nodes will actually be centralized, run by the Qredo network. Based on the total percentage share that they have staked, they will get rewards too, which for the Qredo network will be huge, because they're all the validators at the start. So they're kind of like in a bit of a catch-22 situation there. Like, that's a bit of a conflict of interest. They have to give up all this money that they're going to be making as validators in order to decentralize the network. Now, the fifth party are liquidity providers, and these are exempt from the rewards distribution. And I'm going to go into kind of how this rewards distribution can be made up and how it's kind of a fluid mechanism in a second. So here's an example of how the rewards will be laid out to the different network participants. The important thing to note here is that these can be adjusted by the DAO on a bi-weekly or monthly basis. So let's give an example. Let's say that you've got a site and it's up and running and all the validators are there and you've got all the market makers there, but you don't have enough traders there. Then what they'll do is look at that and they'll say, okay, how do we incentivize traders? Well, we lower their fees or increase their rewards. So the rewards get increased, and obviously that comes from the other party's stake. But in order for the ecosystem to function, you need all these parties to be, I guess, equally unhappy in the amount of rewards that they get, right? That's the sign of a good deal, when everyone's a little bit unhappy. So they'll constantly be readjusting these reward levels for each party involved in order to keep the ecosystem running and to keep everyone equally unhappy. So yeah, we're just going to go into just the token sale details, just so as we can compare these unlock schedules in terms of vesting and cliffs, which I actually think they've mixed up in these charts. But anyway, compared to the other, participants or holders of the tokens, and kind of see where we would sit if we were to get involved. It seems as good a time as any to say it's probably a fair way into the video now. Heavy content. If you're still watching, you obviously appreciate the research that we put in. So if you do appreciate that research and the work, please do give us a sub. We're a small channel and we work our asses off. So yeah, option 1, 50 cent, 30 million tokens, 3% of total supply, max $500. 2 months until you unlock your tokens and they all release at the same time. Option 2, less than half that price and only a third the amount of tokens on sale, but with a 1k max. And the release is over 12 months in 6 months' time from the sale. So after 6 months from the sale, about 2% or so of those tokens get released per week. In terms of which of these options I would prefer, right, and this obviously is not financial advice, but thinking about it, these guys do not have a mainnet up and running as yet. So, well, they don't have the ecosystem as they describe it. They don't have the trust wallets linked to the DEX, linked to the centralized exchange, linked to the trader chat, and the ability to negotiate fees, and all these different moving parts have not come together yet. So we don't, once the hype of this sale wears off, we will see, a certain amount of price decrease, I would imagine. It's, if you look through recent Coinlist ICO graphs, maybe Flow being the notable exception, like it will release at a certain price, and over time, especially in these projects that don't have an up and running system as we speak in place, the price decreases as the hype wears off. So that kind of leads me to lean a little bit towards option 1, even though, again, in the current market conditions, things are tricky. We saw with Covalent that's currently trading at its ICO price and actually dipped a good few percent below it actually in the last few days. So these aren't the guaranteed winners that we're used to seeing on Coinlist, This isn't I got a Coinlist allocation, I wonder whether it'll 5x or 10x. Like, that's not the case. And definitely a lot of thought has to go into how much you believe in this project as a trader, right? Because you're going to be one of the users in this site. Given the information you've seen, is this something you'd be willing to, stop using your Binance account or your Kraken account and move your tokens across to here? In a sense, we're the guys that are going to decide whether this project will be a success or not, and decide whether it's been sold to you as somewhere you'd like to have your tokens, and maybe then you have your answer. So in terms of how the token release schedule of the Coinlist options relate to the other token holders, shout out to Qredo. They didn't make me strain my eyes for those tiny pixels. They gave me a table. Love that. And thanks to their admin, Sonny, in the Telegram group, who was so knowledgeable and so helpful. So if we look at the public sale option 1, right, these vesting and cliff are backwards in this table, but I don't know. Anyway, the 2 months for option 1 before it releases, and then obviously all the tokens release at once. So the only tokens that will be in circulation before that are the initial validators, and the initial validators are the Qredo team, because they don't have any decentralized validators. It is, as it stands, a centralized network, and will be for the start until they hopefully farm those out and actually make it kind of a true DEX, if it can ever be a true DEX. And the ecosystem tokens, so yeah, tokens again, used to further the goals of the network. So they will be released before the public sale option 1, and they will be in circulation. In terms of the validators tokens, of course, they'll be locked in order to earn fees by validating transactions on the network. In terms of the option 2, they unlock at the same time as the private sale, but they unlock at a quicker rate. They obviously unlock after the option 1 initial validators and ecosystem, and they unlock before the team and early investors. And I'll go into the early investors in a minute, because they didn't invest for just tokens. Some of them did so for equity in the parent company. But the the public sale option 2 does unlock sooner and faster in total than the investors and the team. So from that perspective, that's incredibly encouraging. For people who are buying on Coinlist. I mean, you're going to have the option to get rid of your tokens if you so choose before the people who actually built this project. In terms of the fundraising history of this project, it's occurred at an absolutely insane rate. We had the seed fundraising round occur in May, $11 million raised, and this wasn't done in exchange for Qredo tokens. It was actually done in exchange for equity of the parent company, Qredo Finance Limited. On June 28th, they announced the completion of their strategic fundraising round, which included parties like Coinbase Ventures, and this raised $16 million, and the price of this was the same as the cheaper the Coinlist options. And now on July 8th, we're going to have a public sale in which 17.225 million will be raised. So, in the space of just a couple of months, we've gone from seed fundraising to a public sale and just under $45 million raised. So you can look at this both ways. I mean, has everyone in all parties been so excited about this that they want to see it get to market as quickly as possible? Or could it be viewed as a bit of a rushed process? I'd be interested to hear what you guys think. So definitely, if you have thoughts on that, please drop a comment below.
According to LinkedIn, Qredo has 52 employees. Anthony is the CEO, and he's been a managing director or CEO for the guts of 20 years in various companies. And with most of his roles notably being like 5 years plus. He's even managed to sell one of the companies to a larger competitor. Next is Brian Spector. I took this from the IMA that was there today. At RSA, he ran a product line called BeSafe, which he describes as very geeky stuff. And then he went to HSM company called Encipher, and he ran product there. Then he had his own startup called Miracle, and they had a low-level cryptography library for chip manufacturers to speed up their crypto processing in silicon. And then Bitcoin happened, and he realized he was waiting his life, like many of us did. He tried to sell his company very quickly so he could get into blockchain. And then he met Anthony, the CEO, and they also previously worked together at this company called Workshare, and Anthony tried to buy Miracle. The other man in the moment is Josh Goodbody. He got a law degree from UCL, which is University College London, and he worked in places like JP Morgan and State Street. And then he went full on crypto and worked for companies like Hoiboy and Binance. And he's been at Qredo a total of 4 months as COO. That's the team. And for the Brokenomics Catch of the Week, shout out to Mishbal, and Comment of the Week to Brian. Hello ladies and gentlemen, my name is Zach and welcome to Brokenomics. Recently we put out a poll to see... What did we try to do? Fuck.